what are the different types of insurance products and how do I decide which one I should use?
Okay, I'm going to give you a really easy answer, but I think we're going to have another talk to talk about it in detail. Basically, there are two main types of life insurance. There's term, which is for immediate financial need. That is not the kind that you would use as an asset class or an investment strategy or as collateral. And I'm going to ask you a question. Guess what percentage of term life insurance policies pay out?
I'm going to just split down the middle and say 50%, but I have no idea.
2%.
Oh, wow.
Do you know why?
No, I don't know.
Because you have to do all sorts of health tests and exams, and they don't insure people who are not healthy. So I always joke, if you want to not die in 20 years, get a 20-year term insurance. But anyway, the two main types are term insurance. That's a term is determined by time, and when it expires and you're not dead, it doesn't pay out and you've lost all your premiums. And then there's permanent life insurance, which is the minute you start paying for it, no matter when you pass, it has a value and it pays that death benefit. And within that permanent life insurance, which can be used as a collateral, as an asset class, as a really nice wealth planning tool, there's whole life and universal. Whole life is, it's one product inside of it, meaning, remember that investment component? Mm-hmm. Everybody who holds that type of insurance policy and the insurance company invests in the same set of products or investments within it. So it's very predictable. You know exactly the internal rate of return. Then there's universal life. Universal life lets you invest in a much wider variety of products and offerings. But what it means is that it's a lot less predictable in terms of the returns on the investment portion, that bucket, which also means that sometimes when one of the purposes of getting insurance is to use it as collateral, it may be more difficult to lend against it, or they may lend at a lower LTV, which is loan to value. Whether or not you use whole versus universal is something that your insurance planner will help you decide between the two. Every situation calls for a specific solution and a specific product, and that is a discussion that depends on your family's situation.
That makes sense, and I look forward to talking to you more about it. So my final question around insurance is, I'm receiving payments from a life insurance policy, and how does the taxation on that work? So,
unfortunately, you're receiving payments from a life insurance policy because someone passed away. So that's a stressful event. To take away from the stress, know that the payments to you as the beneficiary are not taxable at all. So recall that you're paying for insurance. The person who took out the policy paid for the insurance policy with after-tax dollars. So once something is taxed, that's it. And then the life insurance investment portion, if there is one, continues to grow within the policy. And both of those are paid out tax-free to the beneficiaries.
Okay, that's great. Well, thank you so much for these questions on insurance. And for those watching us at Green Marker, we're going to continue this series, Ask H. So if there's something you want to know, comment in our video and we will do a video. Okay, thanks so much.
My pleasure. Until next time.